We know that going green can sometimes cost more, right? Whether it's organic eggs or eco-friendly fashion. But does the same rule apply in the stock market? Welcome back to the Money Talks podcast. I'm Andrea Heng, and today we are diving into the world of impact and sustainable investments to find out whether your personal values could be the secret to better returns. I am joined by Eugenia Koh today. She is Global Head of Sustainable Finance, Wealth and Retail Banking at Standard Chartered Bank. Good afternoon, and thanks for joining us, Eugenia.
Thanks for having me.
All right, so let's start with the basics because I think sustainable investing and sustainable finance has been evolving over the years since we first heard about it, right? When we hear terms like ESG, impact investing, transition investing, can you break down what each of these actually mean in plain terms?
Yeah, sure. So I guess the way to think about it is it's just different approaches of sustainable investing. So we'll start with ESG investing. It focuses mainly on how a company behaves and how it's managing the different risks across, perhaps what you call non-financial factors like environmental stuff, social governance. The key focus here is that it should impact financial materiality. I mean, it sounds like quite a big word, but essentially, if you think about it, if you're an airline and you're not managing your carbon emissions well, and if carbon taxes rise from, let's say, $5 to $45, like it is now in Singapore, then that adds to your cost of business.
Okay.
So, right, for a company to do well, you need to be thinking about these things, even if you may not necessarily be very passionate about the environment, but if it hits your bottom line, it is just kind of good business and good risk management.
Okay.
So that's what ESG investing is, looking at the really material factors across environment, social, are you taking good care of your employees? Many research studies have also shown that higher employee engagement levels do correlate to better kind of profitable companies.
Okay.
And then finally, on the governance side, we all know that if the company is not well governed, then, it does lead to issues. So that's on the ESG investing side of things. For impact investing, then, the focus really is on generating, a more tangible, what we call impact outcome.
Okay.
So, are you investing in companies if you're passionate about perhaps, let's say, climate, which then are able to say that with my business model, I am actually having a really tangible impact on reducing carbon emissions or green solutions that are helping, also communities in these flood-prone areas be able to, be more resilient. Typically with impact investing, there is a very big focus on what we call impact measurement.
Right.
So being able to quantify that. So it's not just saying it, but actually having the statistics around what impact comes alongside that investment.
Okay.
And then finally, you have what we call like transition investing. So if you think about, I guess, the more older days where people were all about green investing, typically they wouldn't think about, companies like oil and gas or steel within their portfolio.
Yes.
But with transition investing, the idea is that you need everyone to be transitioning. So not just green solutions or green companies, but you need to get, the big companies in, let's say, steel manufacturing or oil and gas to also think about how they are pivoting towards a low carbon future.
Right.
And it does make sense for them because, as we discussed, there are like real risks of not being able to do so. So with transition investing, then the focus is what is the engagement like with these companies? Who are the leaders in that transition? And how much are they then, directing into things like green innovation, so on and so forth.
So that means that there needs to be a lot of accountability and transparency when you demand it as an investor in ESG, in impact investing, in transition investing, because you need to see and make sure that the proof is in the pudding from your investments, right?
Yes.
I mean, is that the chief investor concern when it comes to investing in these kinds of areas?
I would say that for most investors, to be honest, their main concern, first and foremost, still remains performance.
Right.
While they do want to invest in these solutions, very often the broad-based investor does still want to make money. And in this instance, looking for then good quality ESG type products, which are really meaningfully integrating these risks such that they can at least mitigate on the downside.
Okay.
That's important to investors. But yes, after they've kind of crossed a bit of the performance hurdle, ensuring that their products are not what we call greenwash is then important.
Okay. So I'm going to try and understand what it means when I invest in any of these areas, whether it's ESG, impact, or transition investing. So, say I put my money in a company, say that, like you said, is working towards strengthening the resilience of flood-prone cities, for example, right? What does a return look like for me?
So, sometimes when we speak to investors, what's quite interesting is that when they look at some of these funds, the composition of those funds and what gets included does surprise them because it's not always intuitive.
Right. Like what?
For instance, like sometimes when people think about, let's say, climate funds, right? Renewable energy companies are quite intuitive when you see them within a climate portfolio.
Sure.
But even like names like sometimes the big tech, right, which are really investing, not only in their own, let's say, net zero programs, where they're also buying up carbon credits and innovating within the carbon credit space, to also having solutions that help with climate tracking, those names could appear.
Okay.
And, so investors sometimes will be like, oh, wait, it's not very intuitive, right?
Correct.
And then the question then is like, how can I be sure then that it's not just there,
Exactly.
for the sake of, like boosting returns and, it's like a marketing spin, right?
For sure. And I imagine this is something that's going to be top of mind as an investor. If I'm putting my money in something that is meant to be for the good of, the environment, of people, vulnerable communities, for example, I would like to see the proof in that investment, right? To me, that's the return that I'm looking at, right? What other investment themes are trending right now in this space amongst investors? What are they paying attention to right now?
Yeah, so I would say the whole energy efficiency theme is very big, linked to the AI boom, actually. Because if you think about it, sometimes people think about AI and sustainability as two like opposites, right?
Correct,
Just because of
you
the
need so much
consumption.
energy
Yeah,
and
exactly.
data centers and all
Yeah,
that.
but if you think about it, when you speak to the hyperscalers, they will tell you that, look, we have to be really sure that we are also investing in energy efficiency because just of the cost of energy, right? And because of all that's happening in the AI world, people are looking for energy security as well, right? So I think in like clean water and sanitation continues to be something that resonates a lot. I think with, actually even investors in Singapore, right? Where I think we're quite conscious about just like water, right?
And it's quite. I recently learned how blessed we are as Singaporeans to have access to clean water. You go overseas, it's not hard to find communities that actually don't have access to these basic needs.
Yeah, and it's not just in, the emerging markets, which we typically think about when we think about water issues.
That's
Even
right.
in very developed markets like the US, some of the pipes are like really ancient. And so
Yes.
just the opportunities there with like infrastructure and these large kind of companies in the public market space driving some of that from a business perspective, that's actually highly commercial. So it's both ends of the spectrum, I would say. You would have your really like impact-based companies that are driving it in a more like village, helping people with clean water and sanitation. But actually, if you were to kind of invest in that same theme on the more public fund side of things, those some of the water theme funds have actually done quite well for themselves. Yeah, I mean, I buy a lot of our funds myself as well because I feel like I have to walk the talk, so I can see it in my portfolio.
Right. Okay, that's really fascinating, and I'm glad that we got someone who's actually invested in it and working in it as well, because it gives us a clearer idea of what we should be looking out for as investors looking into this space, right? So let's profile the kinds of investors that pump money into ESG, impact investing, and transition investing. What kinds of investors are these, and why would they want to have this?
So I think there is actually not one main profile. I would say maybe they're broken into potentially three profiles.
Okay.
The first would be values alignment, right? So you have investors that are led by their values. It could be environmentally conscious, but it could also be religious. And because of that, typically for these investors, we see that at at the base layer, they would look at exclusions,
Right.
right?
So it's very principles based.
Yeah, it is. So that's the first type. The second type would be, investors who are just generally kind of pragmatic and looking for good risk mitigation as well, right? So for
Oh.
them, it's like, okay, like I understand that the world is also kind of evolving. I see ESG. Maybe I'm not necessarily very environmentally conscious, but I do see the onset of carbon taxes. As I said, Singapore's carbon taxes has risen from $5 to $25 to $45 per
Yes.
ton, right?
Yes.
So, just from a pure economics perspective, I want to make sure that I'm on the right side of, regulations
Yeah.
and in the thinking of my investments. And also you have things like stranded assets, right? When, countries set kind of regulations that said by a certain year, we're not going to allow any more new sale of combustion engine vehicles. You want to make sure that you're not investing in those companies that are not like pivoting enough to electric vehicles. So it's very
Yes.
pragmatic, I would
Okay.
say, right?
All right, fair
Like,
enough.
good risk mitigation.
Okay.
And then you would have your like third kind of profile, which are, just generally like passionate about certain themes and therefore wanting to also then align their investments accordingly.
Right. So very similar to the first group.
Yeah, but not so much like values based necessarily. Maybe they kind of are highly interested in let's say clean energy as a sector.
Right. So renewables would be part of their portfolio.
Renewables, or things like even like sustainable foods, right?
Ah,
And
yes.
there are kind of like funds out there that are also sustainable food themes.
Oh.
So, and then the one thing I would say though is that when people think about sustainable investing, they tend to think about it from a theme perspective.
That's right.
But actually, our steer is also for investors to think about it more broadly because we know that thematic funds generally tend to be more volatile, right? They could have really their seasons where they're really in fat,
Yeah.
but also when the market cycle kind of like moderates, you don't want to have like all your eggs in one basket.
That's right.
And so actually the broad-based ESG integrated funds are good ones to hold in your portfolio.
So earlier I asked you about, what it's like to see tangible returns as a green investor. I asked that because there's this notion being shared that green investing gives you very low yields. Is there really a green tax on our profits when focusing on sustainable investments?
Yeah, so I would go back to the different approaches of sustainable investing. In the more impact investing space, I would say because the focus there is also intentionality of impact, there are some investments on the more private market side which would require you to lock in your capital for perhaps a longer period of time. Right? Like for instance, if you're investing in, let's say, an impact like carbon business, right? That is in forestry. These kind of trees take time to grow. And, your returns there, perhaps, if you compare it to some of the tech investments, you could argue might be slightly lower.
Yeah.
But there, I think impact investors are conscious that, they're willing to make some of those trade-offs because they have conviction on the impact story. On the more, I guess, public market side of things, then I think if you're invested in like, let's say ESG funds, and there are a wide range of them. So, also being able to do some research on the top ones and the good ones out there is also going to be important, just like you would do for your other fund constructs. But typically, research has shown that with ESG, good quality integrated funds, there is no underperformance. They at the very least would be on par to kind of your traditional ones. And, in the mid to long term, there might be some form of a slightly better performance simply because you're mitigating risk well and, you're investing in these long-term structural themes.
Right.
That said, there is also research that shows that there are some ESG funds that could underperform simply because, the fund construct has an overweight in certain sectors. So if you think about it, right? Like if let's say you have a sustainable fund that is more invested in clean energy or clean
Yes.
tech compared to oil and gas,
Yeah.
right? And the clean tech sector goes through a very rough period. During that period of time, then you would see underperformance, right? But the flip side is also true, right? Like if, let's say, you're over invested in certain sectors that maybe are the high carbon emitters and regulation sets in, and carbon taxes set in, then they
Yeah.
would tend to underperform. So I would say it really depends on like the strategy of the product. And ESG is then like one of the overlays to that.
Okay, very interesting. That was very comprehensive answer, and I'm really glad that you gave that to us because I think it's a very nuanced response to that question. It's not black and white.
Mm-hmm.
It really depends on like market movements, really. I
Mm-hmm.
mean, take for example the environment we're in now. There's a lot of sensitivity when it comes to energy prices, and renewables are seeing
Yeah.
renewed interest, no
Yes,
pun
yes.
intended, right? So it's really market movement dependent in a way, and it's tied to global events.
Mm-hmm, mm-hmm. Which is why I think being diversified,
Yeah.
just like normal investing, is
Mm,
actually very important as well for
right.
sustainable investing.
And you can be diversified in this space itself. Within the space is big enough to be diversified, isn't
Yes,
it?
yes. And you can, like, at the very base, have a diversified, almost like S&P portfolio, plus like an Asia Pac portfolio. So
Yeah.
not just within the thematics, and then within the themes, having some diversification does work well.
Okay. If I have $10,000 to start my entire investing portfolio, what would you recommend realistically to allocate towards sustainable or impact investing in terms of percentage, maybe?
Yeah, I think it really goes back to your kind of preferences as an investor and your risk profile, right?
Mm,
So, as I said, I think, thinking about sustainable investing needs to be quite holistic, right? It's not just around like sustainable investing as in itself, but like what is your profile as an investor?
right.
Do you generally look at certain types of asset classes, right? What are your risk tolerance levels?
Mm,
How much do you want to lock in your capital? So I think thinking through that, and then importantly as well, what approaches do you want to take? What are your expectations when it comes to sustainable investing? Once you've kind of figured that out, then you can think about those allocations accordingly,
mm,
right? As we said, I think some broad-based portfolios typically are helpful
mm,
alongside some thematic sleeves, which you're generally passionate about,
mhm.
and then those could be expressed in the forms of potentially a basket of ETFs, funds.
And the other trend pattern that I was going to ask you about is what are the kinds of what are the avenues that they are using? What tends to be popular? Are they going into green bonds? Are they going into the ETFs, like you said, or are they going into funds or individual stocks? I mean,
Yeah,
is that
yeah.
also quite a wide range of patterns?
Yeah, and I think it's also, that's quite a wide range, and it's also dependent on, again, like the wealth levels. So
Mm.
on the more maybe affluent side, you would see them go into things like not just like funds and ETFs, but sustainable structured products.
Ah,
Those have done quite well, from the bank, and
mm,
then things like sustainable time deposits, and then some more impact theme investments. For instance, we do have like these outcome bonds where your bonds and your coupons are tied towards outcomes that are being delivered,
mm,
either in like the carbon reduction space or in certain like social areas.
okay.
But on the more entry level side for investors, I think typically it would be ETFs and funds, and potentially sustainable deposits, because those are just more accessible.
Yeah.
Yeah.
I hate to put this across to you, but I have to because I have to play devil's advocate, right? Because is it just a rich person's game, to put it bluntly?
I would say that a lot of next gen investors are actually quite interested in it, and they may
Mm.
not necessarily be in the rich man's club yet, right? But they see that there are these, like, really, to what we discussed earlier, these long-term structural trends. So I think what's been helpful in kind of putting it outside of just like a more like passion type investing is the fact that it needs to be like financially material. That makes the most sense to the broad like
Okay.
investor base, right? The fact that it can help me like mitigate risk, even across all asset classes, essentially, right? Because on the fund side, you do have like sustainable variants. On the single holdings perspective, even in the bond side, you do have these ESG metrics around
Right.
like the bonds that you can buy.
Okay.
So in a way, I think investors use it more and more as like a risk management kind of expression.
Okay.
And then also to capture like long-term opportunities. And I think the fact that there are these products that they can almost like toe dip into helps make it not so much of like just a rich person's kind of like activity.
Yeah.
Even though obviously on the more impact side of things, I would say that does still sit within the more affluent segment, simply
Okay.
because, capital tends to be locked in for a longer period of time. In some of these investments, it is true that you do have to take trade-offs when it comes to how much returns you get. But, investors who do that go in because of, their own preferences.
Yeah, and it's kind of philanthropic in a way also, right?
Yeah,
When you look at it.
potentially. Yeah,
When you look at it from
potentially.
a
Yeah.
impact investing sort of way.
Yeah, because they could say like, I'm fine with not getting like maybe a 5% coupon. I'm happy with like a 3%.
Right.
Right? And that 2% is like almost my contribution to helping drive like the impact. Like, I think even with next gen investors, they are very pragmatic. They do want to be able to drive towards good returns. So, I think kind of high quality sustainable investments are actually going to be quite critical. And I think it's actually, with some of the more like anti-ESG sentiment over the last couple of years, that has been quite good in cleaning up the space, such that the
Right.
weaker products have actually almost like fallen away. And I think that's just been good because people shouldn't just be investing in it because it's green if you're an
Yeah.
investor, unless you know what you're getting into. But just to have a very clear sense of, what your return expectations, can it meet those expectations, and to kind of push towards those quality products, that's going to be important.
So it's funny how you mentioned earlier about ESG having a bit of backlash, which led to the cleanup of the industry, so to speak. That being said, what are some red flags that we retail investors need to look out for in a fund's fact sheet to differentiate between potential sustainable or transition investments from those that have been greenwashed?
Yeah, so I would say that the first is look out for very vague like marketing language. So greenwashing essentially is just mismarketing, right? Not being transparent and honest about what actually it constitutes. So typically, if you look at a fund fact sheet and it makes claims like, oh, we want to make huge contributions towards carbon emissions reductions, but doesn't necessarily provide you those targets or the metrics of which it's tracking towards, it's always worth asking like those follow-up questions. And then secondly, also, I think looking at like the holdings tends to be quite interesting. So,
Okay.
for us, when we do our due diligence, we like to kind of go down like the entire holdings list to pick up ones that are not very intuitive. And then we'll
Right.
pose like those questions to the portfolio manager to say like, walk me through the process of how this fund, this company would make it into your fund. So if I
Right.
give you an example, I looked at a sustainable food fund
Okay.
many years ago. And it had some like really interesting like fast food companies in
Oh.
it. Yeah, exactly. So that's
Very
typically
counterintuitive, yes.
a response you get, right? So not that it's necessarily good or bad, but you need to ask the question,
Right.
right? Like why would this name make it in, and what's your investment process?
Right. Did you
So-
get the answer you were looking for?
So I wasn't very convinced by the answer. So
Okay.
in the end, we decided like not to bring them on.
Right.
But essentially, they said, oh, like with the world growing and populations growing, this company is good at feeding the masses at very affordable prices,
I see.
right? Which is valid, but I think for the theme of the sustainable food fund, it's probably like not the best fit. Like
Right.
it could be good for like a food or like maybe an accessible food fund,
Yeah.
right? But I think just being a bit more cautious to say like, look, if investors are looking at it, I want to make sure that I can stand up to how you are like putting your fund together.
Yeah.
That's going to be
And
key.
this is why fund managers are important, because they do the homework for you, they ask the questions for you, but you also have to do that homework yourself as a would-be green investor.
Yeah, so I think kind of checking some of that's online, and then if you are, like meeting with your banks or your banker, asking them those questions to ensure that they have done their homework would
Yeah.
then also be important.
Yeah. Test your fund managers. All right. So Let's end off with a useful piece of information here, Eugenia. What's the number one common mistake people tend to make when they try their hand at sustainable investments?
Yeah, I think the first is like not being very clear on what sustainable investing means to them. As we said, it means like so many different things, right?
Exactly.
And so if you were thinking, I want to make like a huge impact with my money, and you were to then invest in an ESG fund, you might be quite disappointed because you would see the holdings and be like, how am I
Yeah.
really, driving towards high impact, right?
Yeah.
Or if you look at it to help you with risk mitigation, and you invest in a very deep impact product, which may not necessarily be allowing you to express that. So I
Mm.
think being able to be very clear of why you're going into it, and the approach that you take, that's like key. The second is just, understanding that, sustainability is a good risk lens, but it's just one of many, right? And
Right.
not to think about it as the only risk lens, right? So
Mm.
it's not like all green funds would like perform well, right? So
Yes.
doing your basic like investor due diligence, that's going to be important. And then the others would be, also quite linked to the point around like just general investor diligence, and kind of thinking around like long-term like strategies, diversification, because typically when people think about sustainable investing, they tend to just focus on certain key sectors, right? Like renewables,
Yeah.
maybe education,
Mm.
and having a diversified portfolio remains very important.
Oh, absolutely. It's a sage advice we hear here on the Money Talks podcast. I'm really glad to hear how mature and evolved the space has become, which warranted this conversation as an evolution of what we've done in the past to get clarity on what it's like to be a green investor. So thank you for wearing the green and being the green on our
Yeah, no
podcast today.
problem. Thank you for having me.
Yeah, the pleasure is ours. And thank you to our Money Talks community. We have a question for you that I want to leave with you now. If you found out that the highest performing stock in your portfolio was a major polluter, would that change your mind? Are you going to cash out and move your money elsewhere? Or are you going to stick with it? Let us know in the comments section on wherever you are listening to us from. Or you can also email us directly, cnapodcasts@mediacorp.com.sg. I'm Andrea Heng, signing off for the Money Talks podcast.